All right. Hello again, everybody. This is Mike Rixey. I'm the lead options instructor for NetPIicks, and this is our midweek options update. For those of you that tried to log on here earlier, I was having some technical issues on my side. I'm in the process of moving into a new house, so I've got things here, there, everywhere. Had some connection issues earlier, had some issues with my camera, so finally supposed to get into our new home next week, new office and so forth. So hopefully I can get rid of all of the technical issues that I've been running into here lately. So I apologize for those of you that tried to log on earlier, and then give it another go here. Over the next few minutes, we'll walk you through what we're looking at here going into this holiday shortened week. As we go into the long weekend, markets are closed on Friday for Good Friday. So we'll talk you through how we've been handling things this week and what we're looking for going into tomorrow's session and then as well as into next week. So I'm just trying to check some things on my side. For those of you that have logged in live, if you guys could give me a quick sound check. If you wouldn't mind, just type in a comment in if you're hearing me okay. Want to make sure everything is good to go. Looks like my audio is coming through okay, so we'll continue to move on. All right, so as I mentioned, we do have a shortened week this week. Markets are closed on Friday, so tomorrow is it. What we normally see historically going into a long weekend, price action typically dries up as you get into midday, that last day of the week. So tomorrow, I would expect tomorrow morning to be pretty active, pretty normal volume. But as you start to get into late morning, potentially even early afternoon, I would expect volume to start lightening up. There's still some things that we can do tomorrow, but I don't want to get ultra aggressive going into the close tomorrow. And just trying to check on volume here as we go. So if you're just joining us here late, if you're having any audio issues, if the sound is going in and out, let me know. And I'll do my best to try to fix it here on the fly. So again, tomorrow, the wrench that could potentially be thrown into the plan tomorrow is if we get any type of headline to hit. What I'm talking about there, we're starting to see the COVID numbers pick up again, specifically overseas, but also here in the US. And if we start to see some headlines hit, potentially leading to some further lockdowns or shutdowns or whatever it might be. Obviously, that could throw the market into somewhat of a tizzy here tomorrow going into the long weekend. But if we don't get any headlines to hit, I would expect markets to continue marching higher. And here's why. From a technical perspective, you're looking at a daily chart of SPY. If we take a look, price action came down last week and tested the 50-period moving averages, both the simple and the exponential. Those are the yellow lines or the orange-colored lines there on my chart. And it has led to another push right back up towards the all-time high. The all-time high sitting at 398.12. The high from today was at 398. We were right there within 12 cents of the all-time high. The level that everybody is looking at here on the S&P 500 is the 4,000 level. If you're looking at the ETF, which I am here, it's the 400 level. A lot of people expecting that level to be tested, and I expect it to be tested very soon, within the next couple of days. The reason I say that is we've been talking the last few weeks about how the NASDAQ's been lagging behind. Some of the big tech stocks like Apple, Amazon, so you guys know the big high flyers. They've been lagging behind, and I mentioned if they took the leadership role, if they started to kick back in, that could be a catalyst to get us back up to those highs. Well, look what the NASDAQ did today. The NASDAQ futures up over 200. You had Apple, Amazon, Facebook, Google, all the big heavy hitters in the NASDAQ were higher. That's what the market needed, to potentially get up towards those all-time highs. Now, going into a long weekend, when volume starts to lighten up, historically speaking, you tend to see markets favor the upside. Because of that, I am expecting further upside going into tomorrow. Again, the wild card there being the news headlines. Once we hit 400, if that happens, I would expect a pretty strong area of resistance there. I would expect us to potentially pull back off of that level. We've got a lot of areas that are still massively overbought. I mean, look at this chart of SPY. I mean, going back to November of last year, it's basically been a straight shot to the upside. We're overdone. But until price action starts to break some key support levels, we're going to continue to see this grind to the upside continue. The support levels that I am watching here for tomorrow. If we take a look at the 8 EMA, that's that solid pink line, currently sitting at 393.77. I want to see that level broken on a closing basis. If we break that level, the next area of support is down around 391. That's where we have the 20-period simple and exponential moving averages. Those are the green lines there. If those levels start to break, there's a massive amount of room on the downside. The trouble here is if we go back historically, look at the last couple of months, anytime that we have tested these moving averages, it's led to a trampoline effect where we move right back up to the highs. We need to break some of those support levels on a closing basis if we're going to get anything going on the downside. The volume continues to be very, very good. The last couple of weeks, we've had no trouble here getting that good volume. We had a couple of sessions there that were a little bit light, but for the most part, we've been between 80 and 100 million shares. That's a good level to be in. My concern is the ATR. That's the average true range indicator down at the bottom. Notice how we continue to see this thing turn lower. As the markets continue to head higher, the range in the market continues to contract. I want to see this level stay above 5. If we start to see the ATR fall below 5, it just means we don't have as good a price action to work with. You don't have as good of a range to work with. Not a deal breaker. It's just something that we have to watch closely. I want to see the back and forth movement. That's the ideal scenario for us as traders. So in order for that to happen, in order for this ATR to move back higher, we're going to need to see some selling pressure. So again, I'm not opposed to getting one more push up to the all-time highs, but from there, I'd rather see some selling. And we'll pick that back up next week, see if we can start to get that scenario to play out. Now, if we're expecting the market to head higher, how do we put that into motion? How do we act on that? Well, one of the trades that we took here yesterday afternoon, little bit unusual week here on this week because we've got markets closed on Friday. Normally, we're looking at our overnight pop trades 3 times a week on SPY because we've got Monday, Wednesday, and Friday expirations. This week, we've got Monday, Wednesday, and Thursday expirations. So a little bit different week here as far as the overnight pop trade opportunities go. The trade that we put on yesterday afternoon, we like to look for our overnight pop trades the afternoon before expiration, typically around 3:30 Eastern time with 30 minutes to go in the day. And what we did yesterday, because we were expecting the market to continue moving higher, we came in and we sold an out of the money put spread. We did that with the options that expire today. They expired here at the close today. We came in and we sold the 394, 392 put spread. All that means is I am selling the 394 put, buying the 392 put at the same time. This is a neutral to bullish position. I am looking ideally for SPY to stay above 394. Clearly, we can see where price closed. We close at 396.33. So this trade, had we held all the way to the end of the day today, would have given us a full profit, full max profit. We did not do that. We closed it out here mid-morning for a nice profit. We're targeting between 50 and 75% of our max profit on these trades. The goal is to close out of those trades as quickly as possible. I don't want to hold through the entire day on expiration. I had some questions on that today. Why not? Why not hold and just keep the full profit? The problem with that is gamma is extreme. This close to expiration, the gamma is really, really extreme. What that means is the options are very sensitive to changes in stock price. You can have a trade that has a great profit the morning of expiration day. If you get a reversal into the afternoon, it can go from a profit to a loss almost immediately. I don't want to have to watch things that closely. I want to be able to book my profit and move on to the next trade as quickly as I can. Just free up my schedule as well. So what we did this morning, let me bring up my spreadsheet so you can see the details of this trade. It's this one down at the bottom. We did sell the 394, 392 put spread. We collected 52 cents or $52 per spread. It tied up $148 of our capital per spread. So very reasonable trade regardless of account size. If you take it with one spread, $148. If you take it with a bigger position size, if you've got a bigger account, no problem with that. You can take it with 10, 20, 30, 40, 50 spreads. Not an issue because this is a very liquid product. If you take it with 10 spreads, you're talking about just under $1,500 of risk. Well, the profit numbers, we closed it out this morning for 14 cents. Okay, it gave us a $38 profit per spread. Again, if you put it on 10 times, you got $380 of profit overnight. That's great. It's a 26% return on our capital. We're into this trade 3:30 Eastern time yesterday afternoon. We closed it out mid-morning. So again, in and out in less than 24 hours. I love these trades. Now, there's a lot of other services out there that will say, hey, Mike, we're booking 400 or 500% returns overnight on options. The trouble with that is they're going to show you all of the big winners that they hit. They're not going to show you all of the losing trades that they have trying to hit those big winners. We're trying to flip the whole scenario around where we're saying, okay, we're going to give up the 500% returns in exchange for a much higher probability of success. The trade that we put on yesterday afternoon had 5 ways of making money. We made money if the stock moved up, down, or sideways, as long as it stayed above 394. We also made money from time decay adding up and from volatility decreasing. So I'm going to have a much more forgiving trade. I don't need everything to line up perfectly in my favor. And that's why we have over an 86% win rate on our trades so far this year. When you start to compare the profit numbers over time, what you're going to see is that the credit spreads can still give you an impressive return. Okay, but we're just going to target smaller returns on an individual trade basis. 26% return overnight, 30% return overnight, 22% return overnight. Those add up. Those are really great numbers because we don't need everything to line up perfectly. These continue to be really great trades for us. So again, we close it out for 14 cents. I had a couple of people that held into the close today and booked the entire profit. That's great. I don't have a problem with that. You just have to be comfortable with the fact that in some cases, holding too long might lead to a partial profit going to a loss. I just don't like that approach myself personally. So I look to close these things out. And we're typically able to do that within the first 60 to 90 minutes of the session. So great trade there on our overnight pop. Now we also put on a brand new trade this afternoon on SPY, going for another quick winner tomorrow morning. Again, I know it's a little unusual to talk about a Thursday expiration, but we do have it here tomorrow because of the holiday on Friday with markets closed on Friday. So we came into the April 1st weekly options, and we came in this afternoon, again, right around 3:30 Eastern time, very typical for us. We came in and we sold the 397, 395 put spread. All that means is I'm selling the 397 put and buying the 395 put at the same time. Now, I got filled on this trade this afternoon for 60 cents. I got filled, collected 60 cents per spread. It tied up $140 of our capital per spread. So again, if you can trade multiple spreads with this, not a problem. You can put it on 10 times and you're talking about $1,400 of risk. Still very doable for a lot of account sizes. But if you just put it on with one spread, you're collecting 60 cents. That's $60 of profit potential per spread. We made money, or we can make money on this trade 5 different ways. We make money if the stock moves up, down, or sideways, as long as price stays above 397 tomorrow. Now, unfortunately, during the last few minutes of the session today, we did get a sell-off. Okay, you can see the price of the spread is now at 95 cents. I'm down about $35 per spread on the trade. What I need to have happen tomorrow, it's still very doable for this trade to get into profit tomorrow. I need price above 397. I need about a 70-cent rally tomorrow. That's very doable. Remember, we talked about the ATR, the average true range on SPY is over 5. We've got a $5 average true range that we can work with. So all I need is a 70-cent move higher. Very doable. Okay, so I need a move to the upside back above 397. Doesn't have to be a huge move. That's the nice part about a spread. These can recover much quicker because the time decay is working in our favor. The volatility decreasing can potentially work in our favor as well. So a lot to like about this trade. What I'm going to do is adjust the price to 60 cents. That way you can see the breakdown on my order confirmation box based on the price that I got filled at this afternoon. So risking 140 to make 60. We make money if the stock moves up, down, or sideways, as long as it stays above 397. We also make money from time decay adding up and from volatility decreasing. My goal in this trade is I want to book between 50 and 75% of the max profit. That 60-cent level is my max profit. I want to buy this thing back for between 15 and 30 cents. If I can do that at any point during the session tomorrow, we're going to go ahead and close out of the trade and book the profit. All right. So that is the goal on the trade from this afternoon. Now, a couple other trades that are piquing my interest for the next couple of weeks. And hi, Kevin. Kevin saying good evening. You're from Florida. Well, thank you for joining us, Kevin. Appreciate you joining us here. I know it's a little bit of an unusual time for us to connect, but had a little bit of a technical issue here earlier in the day. And I am in the process of moving again into a new house. So I've just got a crazy busy schedule here over the next couple of weeks. So another one of our trades setting up for the next couple of weeks. Let's take a look at XLP. This is the consumer staples ETF. I love to trade the ETFs. They're very liquid products in many cases. They don't tend to be as volatile as some of the individual stocks. So they make great candidates for options traders. And what I want to focus on here is the 195-minute chart. All right, you can see that over the past couple of weeks, really for the entire month of March, it's been a very steady increase to the upside. And we got here this week, actually going into the end of last week, it started, but it continued into early this week. It felt like a blow off top to the upside, right? I mean, you can see it went from 66.5 up to almost 70. That's a big move for a $60 ETF. That's a big move. All right. Now we got overbought. And how we quantify that, down at the bottom, we have our pulse histogram. It's the red, yellow, green, and blue histogram down here. And notice we went from red to yellow to green to blue. What does that mean? Well, I'm going to focus your attention on the most recent move to green over the past couple of days. That indicates that price is between a 2 and a 3 standard deviation move on the upside. Okay. What is standard deviation move? Well, it's basically telling us that only 2% of all occurrences will fall outside of this range on the upside. It doesn't mean it's not possible. It just means it's not statistically probable. Odds favor either a period of consolidation or even a reversal to the downside. What happened here? Just look what's happened over the last 24 hours. We have started to see price action roll over. It hasn't been anything significant yet. But if we use the proper option strategy, there's things that I can do from either a sideways consolidation or even a reversal to the downside. Now, just because we get overbought doesn't mean it has to reverse immediately. I mean, notice we've been overbought basically for the last week. So we have to be cautious what option strategy I use here, because overbought or oversold, they can stay that way longer than any of us expect. But if we take a look historically at the other areas of extremes on our pulse histogram, we saw it back late February, early March. We got an oversold condition here, yellow bars on the downside. What happened? Price consolidated, reversed back to the upside. We saw it again late January, early February. Saw yellow bars on the downside. Price consolidated, reversed back to the upside. What I'm looking at now is a very tired market on XLP. I want to use a proper strategy that would benefit from a sideways move or a reversal to the downside. So what we did, let's go back over to the trade page and let's switch this from SPY to XLP. What I did is I went out to the May monthly options. Those are the options that have 51 days left to expiration. If I came in and just bought a long put here, the problem with that strategy is it's ultra aggressive. The only way I make money is if that stock moves lower and it does so quickly. I don't want to be that aggressive. I want to be more conservative. I want to have a more forgiving trade. So what we did is we came in and we sold the 69.72 call spread. All that means is I am selling the 69 call and buying the 72 call at the same time. I'm trading two options at the same time. And I am collecting premium up front to put that trade on. Let me grab my fill price here. We got filled at 79 cents here earlier in the session. Okay, so let me go ahead and change that price to 79 cents and let's take a look at the details. I am risking $221 here to make 79. Why does that ratio make sense? Okay, why am I risking between 2 and 3 to make 1? That goes against what a lot of other people talk about in this industry. I'm okay with that ratio because we've got 5 ways of making money on the trade. I don't care if the stock moves up, down, or sideways, as long as price, in this case, stays below 69. That's the strike price of the option that I sold. I also make money from time decay adding up and from volatility decreasing. In a perfect world, I'm going to make money the fastest if this stock moves lower, but it doesn't have to. If the stock just stays below 69, I'm okay. Up, down, or sideways doesn't matter to me. I also make money every day that passes. The time decay is working in my favor, and that volatility decreasing gives me 5 different ways of making money on the position. And if I am dead wrong, the most I can lose on this trade is $221. The only way I take that full loss is if I hold all the way up to expiration. That's not something I'm going to do. I can always close it out ahead of time and take a partial loss. Okay. I like the risk-defined nature of these trades because in this market, anything can happen, right? They're throwing trillions of dollars around into this market, and you just don't know when those headlines are going to hit. So I want to know what my maximum loss is just in case a headline hits or a news event hits out of nowhere. I want to know what my worst case scenario would be. Now, how do I manage this trade? The $79 that I collect to put the trade on is my maximum profit. I'm going to target between 50 and 75% of the max profit. If I can buy this thing back for between 20 and 40 cents, that would allow me to keep between 50 and 75% of the max profit. That's the goal. Any point over the next 51 days, if I can buy the spread back for between 20 and 40 cents, that's going to allow me to book the profit. I like this trade for a number of reasons. I like the forgiving nature of the trade, having 5 ways of making money on the trade. I just don't need everything to line up perfectly. We've had a very noisy market lately. I don't want to be ultra aggressive. I want to have multiple ways of making money. It's also a trade that I don't need to watch very closely. It's not one that I've got to watch opening and closing bell. I'll check it periodically. I'll check it once or twice a day just for a couple of seconds. Take a look, make sure nothing crazy is happening, and then just let the trade do its thing. Let the profit work in our favor over the next 51 days. Okay. Now, I highly recommend going into a long weekend. If you're interested in buying calls and puts, I'm not opposed to that strategy. I have long calls and long puts on right now on my own account. You just want to be cautious on how much you use them. Don't use them exclusively. Don't use the credit spreads exclusively. When you mix the approaches, that's when you're going to see the most consistency. That's what's going to allow you to react to the changing market conditions. Going into a long holiday weekend, I just don't like to buy long calls and long puts in front of a long holiday weekend, because even though the markets are closed on Friday, if you buy an option, that time decay, that option is losing value Friday, Saturday, Sunday. You have 3 days of time decay that's going to come out of those options. If you're going to buy an option, wait till next week. Wait till Monday. Wait till Tuesday. That way, let that time decay work itself out over the long holiday weekend and then get in at a better price point early next week. I'm not opposed to trading credit spreads here this week in front of a long holiday weekend, because now that time decay, Friday, Saturday, Sunday, that's helping me. It's working in my favor. That's why I love to have a full options toolbox. I want to have different strategies that I can go to regardless of what the market is throwing our way. So just to recap, let me bring up that daily chart. Cautiously bullish here, expecting one more push up to the all-time highs tomorrow. We'll see if that plays out or not. And then potentially hitting 400, if not tomorrow, sometime during the first half of next week. I would expect us to touch that level. And that's going to be the very interesting point. That's where we'll pick it up next week, midweek, for our next midweek update. We'll take a look, see if we get up and test that level. Do we get some resistance to kick in and finally start to get a pullback? All right. So I'm going to wrap it up here for today. If you have any last minute questions, go ahead and get those in now. If you're a current customer, if you've got trades on that you'd like us to take a look at, feel free to type those questions or comments into the chat. Otherwise, I'm going to wrap it up here for the day. Enjoy your evening, everybody. I will be back. I'm going to try to get a session in tomorrow as well for a weekly recap. Again, with markets closed on Friday, I'm going to try to sneak it in Thursday instead. So I'll try to jump back on real quick tomorrow. Take a look at our overnight pop trade, see how that plays out, and see if there's anything hitting our radar for early next week. We'd love to have you join us if you can here tomorrow for the next live session. All right. If you aren't able to join us, enjoy your long holiday weekend. Hope to see you again here with us next week. Rob, let me see. All right, Rob, thanks for the review, analysis, and update. Recently joined NetPIicks and NOS program, so still doing options training. Can't wait until I'm ready to participate. Okay, well, welcome, Rob. Thanks for joining us. If you have questions along the way, feel free to contact me. That goes for everybody. If you're watching the recording, you can always post a comment on the video in YouTube or on Facebook, or email me directly. Mike@netpicks.com is the email address. I'd love to connect and help out with any questions you might have. All right, guys, so I appreciate all of you joining us live. Enjoy your long holiday weekend if you aren't able to join us tomorrow. And we'll talk to you guys here soon. All right, enjoy your night.